Good evening, everybody. It is Monday, April 18th, 2022, and today we capped off the bank earnings season with Bank of America reporting after the bell. Earnings came in actually pretty good. So bank earnings overall were not good, but Bank of America, I think, probably reported the greatest report. So revenue came in at about $23.23 billion. That's actually up about 2% since last year. Expectations on the street, so the majority of analysts on Wall Street were actually expecting $23.13 billion, so a slight beat there. On an earnings basis, or EPS, earnings came in at about 80 cents. The majority of analysts on Wall Street were expecting 75 cents EPS. So a little bit of a beat on the top and the bottom line. Bank of America earned $7.07 billion versus $8.05 billion this time last year. Although I don't think it's a fair comparison, and we've been talking about this a lot on the stream, because last year, all of the big investment banks pretty much benefited from the unbelievable activity in the IPO market. So there's a division of the investment bank called equity underwriting. So the majority of the fee income and the equity underwriting income is generated by either a company IPOing or an initial public offering, and more even recently with all of these SPACs, or special purpose acquisition company. So one of the biggest things in this earnings report, and I think that's why profits were down year over year in terms of the quarter, was that equity underwriting fees, or the equity underwriting revenue, was 75% less this time last year, and that's obviously because of the lack of initial public offerings. Now, last year, across the board, Goldman Sachs, Morgan Stanley, JP Morgan Chase, they raked in billions and billions of dollars in profits from all of these non-profitable tech companies going public, as well as the special purpose acquisition companies. So deal flow has been down year over year. But there's also a couple other metrics I want to talk about, which we'll get to today a little bit later in the stream, which is looking at the data from Bank of America in terms of their credit card spending. You know, what can we conclude from this? Sort of what conclusions can we draw from the credit card data? So we'll talk a little bit about that in tonight's stream, as well as mortgage originations. Obviously, the vast majority of the banks, in terms of Bank of America, JP Morgan Chase, they do a lot of their business from mortgage originations. Bank of America was actually a bright spot because they are the only investment bank this earnings season that actually had an uptick in mortgage originations. JP Morgan Chase, Wells Fargo, both were down about 37% and 27% respectively in relation to mortgage originations. So, let's see who we have in the chat. Hey, my friend Lady O, what's up? Good to see you. Lady O is our great moderator from New Jersey. Bowser is here, says hey Tom. Sanjib, good to see you. Sanjib says hey Tom, how are you? I'm doing really good. It was a pretty good day. My week is off to a great start. I hope the same for you. Michelle K says hey Tom, how are you? I'm doing great, Michelle. Happy Monday to you. Hopefully everybody enjoyed their Easter weekend. I see Arturo Flores and Shauno is here. Welcome, guys. Samantha R says, hey, Tom. Hi, everybody. Good to see you. The one and only Grant. What's up, Grant from New Zealand? Grant, long time no see, my friend. I hope everything is well. Trust you're well over there. Good to see you. Grant actually runs a radio show, which is pretty interesting. I tune in from time to time. Lady O says, hey, Tom. Hope you had a good Easter. I did. I sort of took it easy this weekend. I was kind of a little bit tired from last week, so just kind of took it easy. Randy is here, says, hey, Tom, and everybody. Ruby Falcone is here. MZ Steffens is here, says, hey, Tom, much love from West Palm Beach. You know what? I may be making a quick trip to West Palm Beach in about 2 months, but more on that later. Yana, hello, good to see you. I don't know how to pronounce your name, but I apologize. Solo401 says, hey, Tom, cold up here tonight. Be thankful you're down there, I know. So somebody told me, Solo401, that it's supposed to snow in New York next week, and that's not good because that's the week I'm headed to New York. So hopefully it doesn't snow. Hopefully that's fake news. Lynn Hyatt says, hey, Tom, good to see you. Welcome, everybody. The one and only Ruby Falcone is here. Hey, Ruby. Hope you had a good Monday. Jamie Price Says, hey, Tom and everybody. Gary is here. Says, hey, Tom, good to hear you. Good to hear you, too. For you. Says, good evening, Tom. Welcome. Randy and Santos says, hey, Tommy. Hello from Brazil. Good to see you. NNB 045. Welcome. Good to see you. And Penelope. The great Penelope is joining us from the one, the only Tennessee. So for those of you who are just joining, we're going to be talking about Bank of America today, because the past couple streams we've been talking about how bank earnings are probably going to be the most important to watch. Now, the comparables or the comps this time last year is very, very difficult. And I think one of the main reasons for that is because if you look at the majority of, well, I don't want to say majority, but a big chunk, we could say a big chunk of revenue that are generated from investment banks has to come with equity underwriting division. So when a company wants to go public, or an initial public offering, or a SPAC, which is a special purpose acquisition company, well, who do they have to go to? They have to go to Goldman Sachs, JP Morgan, Bank of America, and these investment banks will charge you fees, oftentimes a lot of fees. So the fee income was down year over year, more specifically in the equity underwriting. At Bank of America, equity underwriting was down 75% this year. But it's not as bad as the media makes it seem, because in 2021, we had so much economic stimulus and the markets were red hot. We were in a raging bull market. So that's when, you know, sort of companies get greedy and they want to cash out and go public, which I understand. Yeah. Oh, dude, Tesla's, dude, this is my favorite Tesla, man. Oh, sorry. What's up?
I like that you're doing this because, like, I too, when I want to travel places, I watch
really?
videos like this.
Oh, nice.
Really
Well,
cool.
Tesla's reporting earnings on Wednesday, so hopefully they do well.
Cool.
We'll see you, man. Take it easy. I think he watched the stream. But yeah, so anyway, what I was saying is, if you think about the equity underwriting fees, the reason why it's down so much is because there's a lot of speculative activity on Wall Street that's come out of the market, which I think is a good thing. So the IPO market has essentially dried up, right? There's not as many companies going public. There's not as many special purpose acquisition companies. So I think, in a sense, it's good and it's bad. You know, a lot of the speculative activity has left Wall Street, but on the other hand, banks are not earning as much money. But they still made a hell of a lot of money in terms of their mortgage origination fees and other fees, which we will go into today. Shannon is here. Good to see you, Shannon. This is good evening, Tom from Illinois. Welcome. So I wonder if it's still snowy and freezing in Illinois. We'll see. But yeah, so I'm seeing a lot of comments about how it's going to be freezing. I forget who it was. It may have been... I think it may have been Cindy Foley who told me that it's going to snow next week in New York. I really hope not, because we're going to be back in New York next week, maybe for about 2 weeks, but that's to be determined. Santo, good to see you. Says, hey, Tom, good to see you. Ruby Falcone, welcome. Jeff, good to see you, Jeff. How are you? Jay says, good evening, Tom, and everybody got two. Wow. So it is snowing across the United States, which is horrible. High of 34 degrees. Wow. Yeah, I'm definitely over the snow. Solo 401 says, Tom, it's been a horrible spring in the Northeast. Well, it's strange because supposedly in New York it was about 70 degrees over the weekend. But obviously the volatility in the weather in New York is pretty much par for the course in March. Hey, Melee is here. Says, hey, Tom and chat. Good evening. Good to see you, Melee. Always a pleasure to have you here. Otto is here. Says, hey, Tom. Solo 401 says, fake news, mid-50s and above, late 40s at night. We'll love that. Colleen T. Good to see you, Colleen. Welcome. Triple G says, hi, Tom and all mods. Lady O says, nah, no snow. It's too soon to know for sure. And Trey 3 says, good evening, Tom from Virginia. Welcome. So we're looking at 1000 Museum. This is where we tend to start the stream. Love 1000 Museum here. One of my favorite buildings. You know, we were just talking about the Aston Martin building, which is another one of the luxurious apartment buildings here in Miami. I think there's about 391 units. 90% of the whole building is sold out, which is kind of crazy. And I think last month alone, there was about $100 million worth of deal flow in that building alone, which is pretty crazy. And I think that's pretty on topic with tonight's discussion about Bank of America, because one of the largest departments at a lot of these big banks is mortgage originations. So obviously we had Morgan Stanley, we had Citi, pretty much all the major investment banks and big banks in America reported earnings already. Bank of America was sort of the last one to give it a go. But at every single bank, JP Morgan Chase, their mortgage originations fell, I think, 37%. Wells Fargo, their mortgage originations dropped 27%. But Bank of America was the only outlier where they actually had a net increase in loan originations year over year. So it was up about 7%, so nothing major. But Bank of America did see an increase about 7%. But Jamie Dimon, which is the CEO of JP Morgan Chase, he gave a little bit of a comment on why the mortgage originations fell off a cliff. And it's obviously because of the interest rates, right? We are in a rising interest rate environment, more specifically with that 10-year US Treasury yield almost knocking on the door at 3%. I think we closed today at about 2.89% on that 10-year US Treasury. And obviously, if you want to know where that 30-year fixed rate mortgage is going to go, you got to watch that 10-year US Treasury yield. So rates are over, I think they're over 5% for the first time since 2011. So if you're looking to buy a property, an investment property, or a single family home, or anything for that matter, you're probably going to be paying over 5% for a 30-year fixed. Hey, Sally is here, says, hey Tom, good to see you. Sally Dragon says, hey Tom, how are you doing today? I'm doing very well. A little bit busy. I was met with a tidal wave of emails today. Sabrina Fair, good to see you, welcome. I don't. Santo, I do not. Mona D, good to see you, welcome. Roy S, says Tom's first stream with the skateboard was April 19th. You know, Roy S, I don't think my first stream was April. I think my first stream was May something. I think I created the channel April 19th. But I think my first stream was in May. Hey Dragon says, hey Tom, I'm on the Discord. Very cool. Thank you for joining. Vinny Castellano says hello from Staten Island. Good to see you, Vinny. Diana, good to see you. Welcome. AI says, good evening, Tom and friends. Hope everybody is well. Hope the same for you, AI. So it is Miami Tech Week. So people from all over are flying in. Jace's newsletter today. So the newsletter will be out tomorrow. So the Behind the Street newsletter will be out tomorrow after the market closes. So if you guys want to receive the Behind the Street newsletter, if you type !news, NEWS in the chat, tomorrow after the market closes, I'll send everybody an email with, I think, the 21st issue of the Behind the Street newsletter. So watch out for that as we are overlooking the one and only Freedom Tower here. Hey, Cindy Foley is here. Says, hey Tom, good to see you. Cindy. RJ says, hey Tom. Olaf from Colorado, good to see you. Hope everything is well in Colorado. My friend Vinny Castellano is joining us from Staten Island. Andrea's A. Brian says, hey Tom, good to see you, Brian. Hey Comic Con Hunter, good to see you. Andrea's welcome. Robert says, hi Tom, looking nice this evening. Thank you, Robert. And I see Yes Forever 18 says the US dollar index was over 100 today. Yes, I saw that. So Forever 18, something interesting today, and maybe you could give your perspective on this. Something really, really interesting today about the market was that there was a massive, massive flood into the dollar, the Dixie, but gold actually caught a pretty nice bid, which is sort of uncharacteristic if we see cash flowing into the dollar, Dixie. So the Dixie was up, gold was up today, Bitcoin was also up today after being down about 2%, so we had a pretty big reversal there. And I think the S&P 500 pretty much ended flat or fractionally in the green. Sabrina Fair, good to see you, my friend. Samantha R, welcome. So this is the Paramount building. And I think the Miami Heat played yesterday. John L says USD, JPY, big dump last 2 months, 12%. Indeed, John L, good to see you, my friend. Hope you're good. So it seems like there's an event tonight at the FTX Arena with all these cars here. I'm not sure what's going on. Yeah, Lady O's like Bitcoin is up. Wow, it's been a while. So I think we're about almost 40% or a little bit more off all-time record highs on Bitcoin. But there was something interesting, and I posted this on my Twitter. So if you guys want to connect on Twitter, you can follow us at Walks Wall Street. But I was looking at the 200-week moving average for Bitcoin. And before we sort of make any cyclical new high for Bitcoin, we usually take a little bit of a drawdown and retest the key level at the 200-week moving average. So if you want to check out that chart to sort of see what I mean visually, if you follow Walks Wall Street on Twitter, I did post that today. Carol H is here, says good evening. What's up, Carol? Always good to see you. It was a beautiful day here in Miami, about 82 degrees. And I think we're at the point in the year in Miami, I guess Florida in general, southern Florida in general, where it's getting increasingly hotter as the days go on. Because during the fall, I guess you could say winter and spring in Miami, it's actually not as hot and humid as people think. It's actually quite moderate. But today was one of those days where the heat was cranking, but then again, I really do like that sort of weather. Hey, Bernard Friedman is here. Welcome, Bernard. Jonathan Richards says hello, Tom. Good to see you, Jonathan, as always. So here's one of the, I want your guys' thoughts on this, because maybe we could try to gauge spending habits in the group. Because as I was on the earnings call today for Bank of America, one of their bright spots was increased credit card utilization and increased credit card spending. But more specifically, Bank of America reported that credit card spending was the highest on travel and entertainment. This as a benefit. Well, maybe I should revise that. I don't think it's a benefit, but I do think it's good news, because to me, if people are increasing their spending on entertainment and travel, well, that means the pandemic is coming to a close, which I think is a good thing, right? Because in some places around the world, like China more specifically. Hopefully we don't get the channel taken down. They're going into lockdowns again. You know, they're going into rolling lockdowns. And I was reading a Reuters article where they state that millions of people in China are going back into lockdown. So, judging by the credit card spending data from Bank of America, consumers are actually spending more on travel and entertainment, which pretty much signals to me that the pandemic is almost over, which I think is a good thing. I think in comparison to many other countries in the world, I think we handled it pretty well, and we are coming out. So, what do you guys think from your perspective? Do you guys tend to see yourselves spending more money on entertainment and travel? Are you planning any new trips, or have you canceled trips due to the pandemic? Sabrina Fair says, yes, Tom, the CCP is locking people in their homes and people are starving. Yeah, I can't believe that. That's insane. I saw some of those videos where the people, did anybody see those videos of the people screaming from their apartments? It was almost surreal. I couldn't believe it. I really couldn't believe it. Hold on, I'll give you guys another view here. YCA says, yes, planning in travel, it's been boring the last 2 years. Lady O says, I will be spending money on travel this summer. Well, that's good news. Hey, Chris Beeman is here. What's up, Chris? Good to see you. Abdul is here, says, yes, Tom. Irish says, China, most part is open. Good to see you, Lou. Al Baker says, hey, Tom. UPS is between China, Russia, and Greg Abbott. Khan says, greetings from Florida. Good to see you. Hold on, let me try to adjust the camera here. There we go. Guzman says, good evening, Tom. Glad to see you, my friend. Always good to see you here, Guzman. Chris Beeman. Nick Rock says, no, Tom, no planning here. Costs of groceries, gas, and electric are eating up any little bit of disposable income. Yeah, so that's obviously one of the drawdowns, because during the coronavirus pandemic, we pretty much went all systems go on fiscal stimulus. So we printed a bunch of money. The Federal Reserve bought billions, if not trillions of dollars in mortgage-backed securities and the U.S. Treasuries, thus expanding the money supply. So we printed so much money. So that actually brings me to a good point. So I was looking at the velocity of money today. So if anybody's not sure what that is, the velocity of money is essentially the rate at which cash circulates through the economy. And it's actually, like you would think, so here's my overall thesis, and let me know what you guys think. The overall thought process is, okay, if we print 70% of all dollars ever created in existence over the last 2 years, you would think money velocity would actually be increasing, but it's not. And that's actually really scary. So why do you think that money velocity is actually going down, if not stagnating, while money supply is at all-time record highs? So here's where I'm getting at. Essentially, cash is not traveling through the economy, which is a sign that the economy is actually not healthy. But we have CPI prints that are at some of the highest levels since the 1980s, 1970s, or 80s. So could you imagine if we actually had a notable uptick in money velocity? I mean, we would have a CPI print of 20%. I mean, if you think about it, because all of that new cash, all of that newly printed cash has to steal little tiny fragments of purchasing power from other dollars, right? But we're not really noticing it too bad, right? I mean, inflation is really bad at 7.9%, and that's with money velocity not moving at all. Could you imagine once money actually starts circulating out there? I mean, we could see ridiculous prints. MVG says, that reminds me, the chat, I think the chat is glitching on my side. MVG says, that reminds me when our communication team installed its on Manhattan. All right. Jay, good to see you. Cons is rich are hoarding money, potentially. Lose is no one is saving. The ABX Girls is my flight from Raleigh to St. Martin by the way of Atlanta is almost full for late August. Wow. But people are using credit to pay their electric bill and get food. Yeah, which is not good. FedEx's Miami Heat playoffs game versus Atlanta Hawks. We'll here for that. Hey, Ibrahim Azam is here. Says congratulations on 1 year on the channel. Well, thank you, Ibrahim. Much appreciated. 61 is here. Says hello. Good to see you, 61. Hope you're well. Ruby, hope you had a good Easter. Corey says printing money equals inflation. I agree. It seems like some politicians don't understand that, though, for whatever reason. UPS 1 says, wasn't trying to be political, but the back up of trucks in Mexico are hurting us in the grocery stores. Yeah, I mean, the supply chain and logistics have been a big problem for many months now, many years now. You're right. So this is Northeast First Avenue. MJ says, Tom, who got the 70% of money printed? Companies are making record profits. They are artificially creating inflation. And where is this money? Most of us didn't even get a pay increase. Yeah, so again, the Federal Reserve is the one who prints money, right? So I think a lot of the politicians are trying to create the narrative that inflation is being created by the greedy corporations and things like that, which that's not necessarily true. And I'm the first person to call out that type of stuff. But what you got to understand is, if any of these politicians actually worked in the business world or owned a company, instead, these people are career politicians, so they've never created anything in their life. They don't understand how supply chains work, and they don't understand what it is to run a business. So, for example, I own a small business, and I've had to increase prices. And the reason why you have to do that is because it's not just like products are sitting there, right? You know, you have to manufacture these products. So, for example, I'll just give you a real-world example here. So I've been selling a lot of routers to customers that are building out their SD-WAN environment. And SD-WAN is essentially a software-defined wide area network. So in a lot of these routers, there's many semiconductors or teeny chipsets in these routers. And a lot of these customers that I have require custom builds. So let's say if you need like a Cat 6 or a Cat 4 or a Cat 6 router, oftentimes they need to work with very specific radio bands depending on where these routers are going to go. So oftentimes I have to put in an order with a specific OEM to build these products, right? So if chipsets are going up at 20%, in order for me to maintain my gross margins, I need to then increase the prices on my customer. So it's like a trickle-down effect. And the thing is, when you're managing a massive supply chain like that, and you're dealing with hundreds of thousands and multi-millions of dollars, you have to plan 6 to 12 months, if not 24 months in advance. So if you see the industry trend, and at a lot of these big companies, they'll actually hire economists to forecast this sort of stuff. So they have to build in sometimes even more profit margin because they're making these contractual deals with these OEMs and vendors that are locked in for 18 to 24 months. So if inflation keeps pushing prices up, so these 2 quarters, yeah, for 2 quarters, companies may even expand their profit margins and make more money, but they have to do that to maintain the logistics of the company. It's very hard to say, okay, we're gonna maintain our margins by increasing prices 10%. Well, then what happens if your cost of raw materials go up again? Then you constantly have to keep reneging and redoing contracts. It's a big, big mess. So when these politicians say, oh, look at McDonald's, they're earning more profits than ever before, yes, that is true, but it's not like you could forecast this stuff and maintain margins for like 6 to 8 months. It's just not possible when you're dealing with multi-billions of dollars worth of assets. So hopefully that makes a little bit of sense. Yo, WW is here. Good to see you. Welcome. Always good to see you, WW. UPS as well, it starts with the oil prices. If oil goes up, transportations, plastics, energy, chemicals, and synthetics all go up. It's a snowball that starts with the oil companies. Yeah, you're right. So crude, to your point, a lot of products, a lot of plastics, crude oil goes into production of those products. So you're 100% right. MJ says, thanks for the insight, Tom. I appreciate different perspectives and thoughts. Yeah, but I do agree with you, MJ. It can seem like sometimes that these corporations are being greedy and they're trying to slam dunk on people. But when you're trying to manage like a massive supply chain, just in terms of my very small example for me, it would be almost impossible to tell my customer, hey, the price of the raw materials that go into making your router went up 20%, so I'm just gonna bump you up to maintain the profit margin of 20%, right? So I make 20% on my hardware margin, so to maintain that, I need to bump it up that concurrent amount. But my thought process is, look, we're in a rising inflation environment. I'm gonna build in an extra 4% of profit margin for me. So down the line, let's say in a year or two, if I get another order for 500 routers, I don't have to adjust the price again and then redo the whole business model again. I could just bake that in now. So oftentimes the prices will stay consistent for the next 12 to 24 months, but in these earnings reports now, everybody will flip out and be like, whoa, my gosh, look at how much money you're making, it's crazy, but they don't understand forecasting. And a lot of politicians, they don't understand that because, well, they're career politicians. They've never been at a company, they've never owned a business, so they don't understand. Yo, we have Triple G. What's up? Good to see you, Triple G. So I think we may take the Metro Mover tonight. I think we may jump on the Metro Mover. Hey, Dean is here. Welcome, Dean. Always good to see you. Paul, P-U-L, says good walks, and what is the topic for tonight? So Bank of America reported earnings today. So we were talking a little bit about the specific, I guess you could say the specific criteria within that earnings report. So we were talking about how investment banking income was down, how equity underwriting income was down. And I think one of the main reasons for that is because we are coming off a year of record initial public offerings. So in 2021, we had an unbelievable run up in the stock market. The equities were going gangbusters all year. Record high, record high, record high, almost every single day. So this created an environment where I guess you could call it irrational exuberance, where a lot of companies really wanted to get in on the action. So a lot of companies went public via IPO, as well as via SPAC, or Special Purpose Acquisition Company. So anytime a company goes public via IPO, they have to hire one of the investment banks, whether that is JP Morgan Chase, whether that's Citigroup, Morgan Stanley, or Bank of America. So the more deal flow or the more deal activity that flows through these banks, well, the more fee income that these banks get, right? And oftentimes that's called equity underwriting. So at many of the banks, this activity or this revenue fell off a cliff because the IPO market has essentially dried up ever since we fell into this bear market / correction. Hey, Line Sinks says career politicians in the UK are similarly all too often removed in their thinking from the lives of the majority of the population. Yeah, I agree. I mean, the biggest thing that causes all this inflation is the money printing, for sure. So let's walk around the block and then we'll get on the Metromover. But I want to get on at a different station because I want to see what it's like getting on at a different station as opposed to this one. We always get on this one. Hey, Tucson is here. It says, I second. Let's go on the Metromover. We will, but let's cross the street and let's get on at a different stop. Because I feel like we always get on the Metromover at this stop. Hey, yes, Forever 18 says inflation going up means money depreciation, so our value decreases also, which also means is production decline. To maximize the value of production, companies either invest in technology or human capital. So Forever, yes, Forever 18, that is a great comment. And I think, so to your point, I was reading, I think we actually did an entire stream about this. And what we're seeing in the labor market is really interesting. And I think it could backfire on a lot of people. And we sort of talked about this because report, and one of their line items is obviously research and development, or R&D. Amazon is investing so much money into R&D to literally buy robots to replace, well, they obviously don't say that, but that's really what it's for. To buy robots to replace the Amazon warehouse workers, right? So whenever a company runs into headwinds, let's say they have to pay out increased salaries, employees try to form unions or things like that. And this isn't to give my opinion on unions or anything like that. The point I'm trying to make is anytime a company runs into, let's say, like a bottleneck or any type of adversity, that turns the main point of focus to, okay, how can we increase operational efficiencies? So one of the reasons, or one of the ways that Amazon is going to increase a lot of their operational efficiencies is by investing in the robots. Quite literally robots to work in the factories and procure and even deliver a lot of these packages. So why would you need to pay a factory worker $19 an hour to pick, pack, and ship products and services when you could just have a robot do it? So if you look at Amazon's most recent earnings report, you'll see they spent billions of dollars. The highest spending on robotics was last quarter for Amazon. So when workers, I think right now workers have the upper hand. I think in about 3 to 5 years that is all going to change. So that's why I tell people, if you're looking for a job, I mean, enter the workforce now and take advantage of asking for a raise or a higher salary, because I think in 3 to 5 years it's all going to reverse hard and you're going to see a lot of disruption for sure. So here we are outside of the main, what's it called? The Freedom Tower. Hey, Fantastic Frankie, how are you? What's up? Alfonso Gonzalez says real estate or stocks and inflation. So usually real estate performs a little bit better during times of inflation. So this is the Freedom Tower here. Abdullah, welcome. Rob DeCaro says this weekend the temperature here in Connecticut. I always say Connecticut whenever I read your comment, but it's not. That's my dyslexia kicking in. In Ohio, Saturday the temperature will be a high temp of 76 to 80 degrees. Very cool. Triple G, good to see you. Yeah, but Alfonso Gonzalez, usually real estate tends to perform better in times of inflation. Hey, John L says Redfin says more sellers are cutting home prices as housing market demand begins to soften. Yes. So John, I think you're spot on, and we could really tell a lot of that data from the banking reports, banking earnings reports today. And I think Bank of America was the only bank that actually saw an uptick in loan originations. Let's go this way because I'm getting this, I'm not sure if you guys can hear that. Somebody is blowing the bass out of their car. You know, I always wondered that whenever somebody's driving around and they're blasting the music, like the bass, how do they stand driving around? Don't they get a headache? Hey, NMB045, good to see you. What's up? Hope you're well. So let's try to get on the Metro Mover at this station. But to John L's point, the number one, well, not the number one, but one of the main topics of the Bank of America earnings report was that due to rising interest rates, obviously we have that 10-year Treasury yield now at 2.87%. And since the 10-year yield's up, that means that 30-year fixed-rate mortgage is over 5%. So due to rising interest rates, loan originations have fallen off a cliff, except the Bank of America, which is pretty interesting. So at all the major investment banks, loan originations in terms of mortgages fell off a cliff, but Bank of America was actually up about 7% year over year. So pretty interesting. Dutchman, you're right. Oh, here was a Metro Mover right here. Hey, Thomas, good to see you, my friend. Con I am, says Tom, this customer service sucks at Bank of America. Yeah, so I think I usually tend to bank with JP Morgan Chase. So I'm one of Jamie Dimon's clients, I guess you could say. Hey, Lodi is here, good to see you, welcome. Hope you're having a good one. So we'll walk past, since we're here, we might as well walk past the Miami Bowl. So we're about to pass the Culinary Institute of Miami. Or I think it's called Miami Culinary Institute. I gotta check. MJ says, Tom, do you see any way to fix the housing market so the middle class families can afford to buy homes again? The future worldwide seems like a rent-only reality for the middle class. Ooh, I think that's probably the comment of the night. Well, I think in order to sort of answer that question, I think we need to address the problem and realize why, I guess, so here's how I define a bubble, and I think everybody defines a bubble differently, but here's my definition of a bubble in relation to the housing market. And this is just my definition, so I may not be right, I could be wrong. And you guys let me know what you think. But my definition of a bubble in the housing market is when home prices increase to the point where the average American making an average income can no longer afford the mortgage payment. That is when we hit bubble territory. That's my view. I'm not saying I'm right. I'm just saying that is my opinion on when we're hitting bubble territory. So we've surpassed that a long time ago. But why did we get there? And I think the reason why we got there is because of artificially low interest rates set by the Federal Reserve. So ever since the 2008 financial crisis, we've been in an environment where money is essentially free, right? I mean, if we have a CPI print of about, 8%, I guess you could say, give or take. You know, there's a lot of economists on Wall Street that actually say, hey, if we calculated the CPI the same way as we did in the 80s, well, we'd probably be seeing 10% inflation. It's possible. But when you leave interest rates artificially low, it'll allow people to artificially extend themselves based upon what they could actually afford. So the $500,000 house could technically, I'm using air quotes here, the person could probably afford it making an average salary, but that's talking about the payment, right? And I think that's the absolute wrong way to look at things is, oh, could I afford the payment on the mortgage? I think that's the wrong way to look at it, because you could technically be overextending yourself if the property is $500,000 and you're making 60 grand, but you could afford the payment because your interest rate is 3%. I mean, what happens if you lose your job or something like that? So essentially what it's created is a massive debt-based society. So I think if we can return to a normalization of interest rates, Americans will be able to save money in their bank accounts just like, my grandparents did, and maybe they'll be able to make 6% just by saving their money in a bank. So that'll promote a saving environment. Here's the Miami Bowl, by the way. Excuse me. I gotta get some water. So this will promote a saving environment in the country instead of just debt acquisition. Because now with central banking and artificially low interest rates, the money game has fundamentally changed. The money game has changed to how much debt can I take on, leverage myself like crazy, and just live off the cash flow. So what a lot of people are doing is they're like, okay, if I'm an institution, I'll just borrow $100 million at 2%, and I'll just go buy all the single family homes myself and rent them out to all the middle class people, right? And I'll still make money on it because I'll just live off the cash flows and use the cash flows of the property, to pay down the mortgage. But if you actually had interest rates that were normalized, average Americans could save money in their bank account and accumulate wealth via interest and save up to buy a home. But that's sort of my take on it. I did see a very good comment, which I want to scroll back to. Rich says, Tom, loan originations can be down due to the record low inventory. Values up 13% versus last year in the Milwaukee metro area. Not uncommon to see 10 plus offers. Yeah, Rich, I think you make a very, very good point. So Jamie Dimon, the CEO of JP Morgan Chase, actually made that same exact comment by saying, look, even though interest rates are ticking higher, we still have record low inventory in the United States. And I think this could be due to two things that I think about, but I want to know your opinion. Number one is, let's say if you made a lot of money on your house. You own a single family home, you own a duplex, and you've owned it for 5 years and it's since doubled in value. Even if you sell it, right? Let's say even if you sell that home and you make $500,000, $500,000, you're just gonna have to go into the same competitive housing market and try to, get into a bidding war with all these other people just to get into another property. So people don't want to be bothered doing that, especially during a global pandemic. They would rather just sit and, maybe they just want to refinance their property or pull the equity out and do something else with it or remodel their home. So that's sort of one of the reasons why I think we're still experiencing low inventory. And maybe that's just a little bit of anecdotal data, because talking to some of my friends on Long Island, that's exactly what they're telling me. They're like, look, Tom, I could sell my house. I could make $500,000. I'm just going to have to go right into the same housing market where everybody's in a bidding war and try to get another place to live. So why don't I just stay? I don't know. Hey, Noel Rodriguez, good to see you. Says that's bull. Good to see you. Joe Long says bull. Good to see you. 61 says, will you be attending the Emerge Americas event tomorrow in Miami Beach? I will not, but I want to. But unfortunately, I will not be able to, unfortunately. T&Me TV says, Tom, the house next door just sold for $459,000. Wow. My house is twice the size, $204,000 22 years ago. I'm selling as is soon. Wow. Well, T&Me TV, which location are you in? Which housing market or sector are you in? Yeah, Katie. So I think they're actually going to redo that, which is pretty interesting. So I think there's actually a couple people that are petitioning for them to redo the Miami Bowl. MJ says, Tom, thank you for the insight. Appreciate it. No problem. Dutchman says, that's what Japanese Denver, California, and Chicago investors did here in Phoenix. Bought houses and rented them out, so only the middle class could afford to rent. Yeah, and I think that's what's called, we are headed towards a renter nation. You know, I was actually reading a really good article out of Tampa, Florida, that says the inventory is so low in Tampa, but they did a study, and about 25% of all the homes in Tampa, Florida are actually completely vacant. So what they're saying is so many people are using houses just as an investment. So institutions will come in and just buy all these homes up, but the vacancy rates are some of the highest in the country because they're just buying these homes in Tampa, Florida, and they'll just sit on them. They don't even care. It's really kind of weird. Hey, Joe Long is here. Good to see you, Joe. Welcome. All right, I'm going to put the camera down for 2 seconds. I just got to get some water. But we are on the campus of Miami-Dade College. Yo, Pixelogic is here. Says, hey, Tom, what's up, Pixelogic? Good to see you. We were just checking out the Miami Bowl. But guys, so if you like what we're talking about today, tomorrow after the market closes, I'm going to send everybody a copy of the behind. If you scan the QR code on your screen, every single week I write an investing newsletter for about 800 investors now. So thank you guys for signing up for that. It is a completely free newsletter. So if you do scan the QR code, every single Tuesday afternoon after the market closes, I'll send you a free financial newsletter, not only covering US equities, but also covering emerging markets, the housing market, fixed income, and commodities. And I will send that out tomorrow right as the market closes. So just let me get a cup of water. We will head back on our way. Jonathan France, good to see you. Hey, Capital Post is here. Welcome, Capital Post. Matthew, welcome. Pixelogic says, hey, Tom, happy Monday. Happy Monday to you too. So this is the campus of Miami-Dade, and this is actually their trading room. I wonder if they have Bloomberg terminals here. But a lot of people are in Miami for Miami Tech Week. Hey, Triple G says, Tom, cash buyers are hurting banks. Banks make big money with mortgages and various other loans, says Triple G. Yeah, you're right. You're right, Triple G. You are 100% right. So I was, but also, I mean, if you think about it, I think the vast majority of the income of, let's just talk about the investment bank, is probably from, you know, equity underwriting income and investment banking fees. And those were all down so far this the comparables, we'll actually walk this way and then up, but the comparables of the comps from last year is almost laughable if we want to compare them, because last year we were in a raging bull market where we had so many companies. It was like a company was IPOing a day. There was so much deal activity and so many companies going public via IPO, and not only via IPO but via SPAC, or special purpose acquisition company. So anytime a company wants to go public, somebody has to do the equity underwriting for that. So they either go to Goldman Sachs, Morgan Stanley, Bank of America. Not only do the insiders make a lot of money, but the investment banks make a ton in fee income. And since we are in a bear market, well, technically we're not in a bear market. We were for a couple of days, but I think we'll probably fall back into that bear market territory. I guess we'll say, since the stock market isn't going to the moon every day, the IPO market has essentially dried up. But I will say one thing. If you want to try to identify a top quality company, pay very, very close attention to the companies that go public during bear markets. Because the companies that go public during bear markets tend to be the most financially sound companies out there. You know, any company could go public during a bull market. You know, that's when there's irrational exuberance. But if you're a company that can go public during a bear market and raise capital during a bear market where nobody wants to invest, that company you need to be paying close attention to. But if you guys are enjoying the stream tonight, feel free to leave a like on the video and subscribe to the channel if you are new. Hey, Al Baker's here. Good to see you. Welcome. William Travis, good to see you. Buy the Book is here. Says, hey, what's up, Buy the Book? Hope you're well. Yes, Forever 18 says, cash is the best for the bank. Bank prefers to have cash today more than lending, I guess. You could consider that too. You know, once you deposit money in the bank, it's not like it just sits there. The banks then take your dollars and lend those dollars out. And the vast majority of money in the world actually doesn't even exist. It's just all digitally printed on a computer screen. Hey, James, welcome. Says, I am not sure anybody really knows what is going to happen with all this money printing over the time. Good point. Well, check out the Berlin Wall. Wow, this is cool. So this is actually a piece of the Berlin Wall here at Miami-Dade College. I mean, talk about a piece of history. That's unbelievable. Hey, Geronimo says 828. Thank you so much for signing up for the newsletter. Yeah, so I think this whole money printing has been just one big experiment, right? And I think a lot of money managers on Wall Street severely underestimated the Federal Reserve's ability. I guess the analogy I like to use is keeping the balls in the air, if you will. So how long can they maintain this environment of artificially stimulating the economy and propping up the stock market via printing money? When we talk about that, what that essentially means is they take money and they buy mortgage-backed securities, they buy US Treasuries, and it expands or balloons the Federal Reserve's balance sheet. And now it's almost at $9 trillion is the Federal Reserve's balance sheet, which is crazy. And I was actually reading a piece of research out of Goldman Sachs And they said ever since 2008, there is a 97% correlation between the Federal Reserve's balance sheet, or the trajectory of the Fed balance sheet, and US equities. So essentially, if you take a look at the Fed balance sheet, and I actually gave you guys a link where you could track the Fed balance sheet in real time. So if you type !news, NEWS, in the chat, and you go to, I think it's newsletter number 15, you could actually click the link and watch the Federal Reserve's balance sheet in real time. And ever since the 2008 financial crisis, there is a 97% correlation between the direction of equities and the expansion of the balance sheet. So if the Federal Reserve's balance sheet is going up, well, there's a 97% chance that stocks are... Yeah, James Tiger says, Tom, Fed has been in emergency mode for too long. Indeed they have. Hey, Photos from Around New York is here. Welcome. So I think this is going to be the site where the brand new Waldorf Astoria building is going to be. I think. So the Waldorf Astoria building is going to be the tallest residential building south of the One World Trade Center in New York. But if you look straight ahead, this is Bayside Marketplace, and there actually appears to be an event here. Hey, fourth quarter is here. Welcome, fourth quarter. This is the streams are for the compliments, appreciate it. Trevor says, what are some positive things going on in the world? There's a lot of positivity, a lot of positive things going on in the world. I think the number one thing that's positive in the world is the exponential growth of a lot of these software companies. I think they've made lives easier for the vast majority of people. And also a lot of these biotech companies, especially in gene editing and DNA sequencing. I think it's going to cure a lot of diseases. Century. So I think the technological revolution overall is very positive for mankind. Speaking of banks, this is the Citigroup building right here. Hey, XOXX Bob says Waldorf Astoria will be 100 stories and 1,049 feet tall, the tallest building south of New York City. Trevor, that's going to look, Bob, that's going to look insane. That's going to be ridiculous when it's done. I can't even imagine what that's going to look like. Samantha R says Metro Mover now. Yes, we will be going to the Metro about probably less than a quarter mile. Samantha R, good to see you. Dutchman is here, says Tom, do you ever envision seeing the national debt being cut by 50%? I do not think so. So I think we've reached the point of like terminal velocity, where I think the only way to get out of it is just to print more money. I mean, I don't really see, just look at the interest on the debt alone. So really the only way is to inflate your way out of it, which is probably not even gonna work. But I don't know, I don't think I'm smart enough to give you an answer on that. That's unfortunate, this guy's getting towed. But I really don't think, I don't know. It's just, I think it's gotten to the point of no return. And I think that central bankers around the world are going to continue this Keynesian economic ideology of just printing more money. Hey, Melee is here. Welcome, Melee. This is good evening, Tom, from Scranton, Pennsylvania. It is snowing now. Wow. Good to see you, Melee, as always. Wow, Carol H. I used to work for Citi in that building. So Carol, how is it in that building? And what did you do specifically for Citi, if you don't mind us asking? In the spirit of financial earnings season, I guess. Hey, the RT440, since we had a budget surplus in the 90s and things were great. Agreed. Yeah, I mean, I don't know. I really think we reached the point of no return, but I think I'm more of a trend follower. So as long as the, what's the famous saying, I guess? As long as dancing, and then when the music stops, you got to run for the hills. But I think we'll know when everything's going to come to an end. You got to look at the bond market. I think the major decline in stock prices will start in the debt market. So I think a lot of people oftentimes look in the wrong direction. They think, okay, well, I want to know where stocks are going, so I'm going to watch the stock market every day. But you need to look at the bond market, because the bond market or the debt market is a derivative, or derives its value from the stock market, or vice versa. So when you have an implosion in the debt market and I think that's when you're going to see the crazy declines. Carol H says, AVP, Private Banking Senior Relationship Officer. I had an amazing view. Wow. I could imagine. Because right here you look directly over, I think South Beach is this way too. Hey, Samson is here. Says, Tom, do you ever watch the movie Margin Call? Yes. Great movie. Hey, Ernest Martinez Jr. Good to see you. Semper Fi is here. It says, hello, Tom. Good to see you, Semper Fi. Hope you're doing well. Melee says 26 million people in Shanghai this week are locked down for COVID. Yeah, so, I haven't really been following it too much, but what is everybody's take on that? Because I was reading an article in Reuters, and supposedly the Biden administration is advising that all US citizens leave China and come back to the United States. So it must be pretty serious if the Biden administration is advising Americans to leave China and come back. But supposedly over 20 million people are on lockdown still. I don't want to get too COVID political, but when are people going to learn that lockdowns don't work? Who knows? Melee's big problem is the chip shortage. Very true. Yeah, you're right. So we're still dealing with that semiconductor shortage. And here's the thing that really stinks about that. All of the major products and services that we use every day, semiconductors need to be used for that. So if you think about EVs, so as we are sort of moving ourselves off of oil and gas to EVs or electric vehicles, well, there's almost 2 times as many chips that go into the internal combustion engine car, almost 2 times the chipsets. Now, just think about, that's just one use case. Think about the 5G rollout. Think about all of these new smartphones, tablets, computers, your refrigerator, your microwave. All of these products and services require a chipset. So I think it's creating the perfect storm, and I think that's probably why we're going to continue over the long period of time to see pretty good returns out of the semiconductor sector. such as AMD, Nvidia, Broadcom, ticker symbol AVGO. Okay, let me give you guys a shot of the Intercontinental Hotel. Hey, Jay Einstein, or Eisen, says, Tom, no more masks on planes. Is that true? I didn't hear about that. Samson says, I personally think lockdowns are about power, not COVID. When you lock down a nation, it's a massive power grab. I agree. Mark Sage says, good evening, Tom. Feeling the good vibes from Miami tonight. Hey, Mark, thank you for joining. Dennis Henry says, Florida. I didn't hear about that. So I'll give you guys my take on that, and I don't want to get too political, but I think the pandemic has taught me something about New York City specifically. So I very, very seldom take the subway, but I can guarantee everybody in this chat that if I ever take the subway ever again in my life, I will be wearing a mask. Doesn't matter if I'm gonna wear a mask in the subway every single time I take the subway, and I'll tell you why. I'll tell you why. It's not because I'm afraid of getting sick. That's not the reason. COVID made me realize just how disgusting everything is. If you guys have ever been into a New York City subway, I mean, especially now, I'm not just talking about, oh, there's dust. No, there's human feces in the subway. You know, people just literally, they're urinating on the tracks. There's literally rat poison on the subway tracks. And News Channel 9, I think it was, or News 7 New York, did a study on the air quality in the New York City subway. And it is some of the worst air quality in the world in the New York City subway. Seriously, you could go look it up for yourself. It's not about COVID. It's literally the New York City subway. The air quality in the subway is approaching on, it's almost like, that's a pandemic in itself. And I really, really worry about, I think we'll go this way because we don't go this way all the time. I really worry about one of my good friends that's in the Port Authority Police Department, because Port Authority police officer, or an MTA police officer, MTA. You're in the subways and in Penn Station 24/7. You don't even get a chance to go outside and walk around. So can you imagine all of those officers, both male and female, they're breathing in that disgusting Penn Station air 24/7, 365. I mean, if we think about what happened during 9/11, right, and I have some experience with this because my uncle was one of the head guys for Local 14 to head up a cleanup operation at Ground Zero. And just from being at Ground Zero for about a year, he developed unbelievable sicknesses, or called 9/11. All those police officers that have to breathe in that disgusting stuff every day in the subways. I mean, I'm not saying that they're going to get sick, but I mean, I'm sure the odds increase. So I want you guys to watch this YouTube video about a study one of the local news channels did in New York. And they said every time a subway passes through a station, every time one of the subway trains goes by, if you notice, you'll feel like a breeze in the tunnel. That breeze is filled with rat poison, literally live rat poison, human feces, human urine, and even remnants of the plague, literally the Black Plague. And it was really eye-opening to me. So I'm like, dude, anytime I go in the New York City subway, I am gonna wear a mask all day, every day. So that's my thoughts on that. So not really COVID related, but I will be, I mean, I don't want to take any chances, but let me know your thoughts on that. Let me know what you guys think. I know. Fantastic Frankie says I have to watch this. Please watch it. I'm probably going to link it in the Nightbot soon. Hey, the Eyeglass Lady, welcome. Good to see you. Joe Long says I agree, Tom. Jose says, oh my God, I would wear a mask also. Carol H says I worked at the World Trade Center 2 tower. Oh my God. Caddy says better be an N95. So I think I have N94s. But I'm not making this up. I mean, I swear to God, if you go on YouTube, I think it was either News 7 or Eyewitness News, they actually brought in real scientists to do testing of the air quality in the subways. And it is some of the worst air quality in the world. Not just the United States, but the world. Otto's the same here, masking all the way, agreed. JM's is wearing N95 time as well. 1239, so the loss of smell isn't linked to COVID, but the New York City subway. I don't know about that. 61 says, I agree with you, Tom. Rich says, I wonder what the radon gas levels are. I wonder that too. Hey, Tom Burke says, Tom, very smart to wear a mask in the New York City subway. Yeah, and it's not just I'm afraid about getting sick, like of catching a cold from somebody, because I think that's like a natural thing of life, right? If you're around people that are not like deathly sick with COVID, but just have a little cold, you know, it builds your immune system, that's fine. But imagine all like the particles, the microdust, the rat poison. Like, you guys have to start to think into this more think about all the disgusting subway tracks to kill all the rats. You know, it's literal rat poison. It's disgusting. Estelle is here, but I'll stop ranting about the air quality of the subway. I apologize. I'll show you guys Miami Tower. Hey, Melee is here. Yo, Cosmo Scary, what's up? Cosmo, good to see you, my friend. Hope you had a good Monday. Yogi is here. Welcome. Tamara says, good evening, everybody from Texas. Love Texas. I'll probably be in San Antonio later this year, so excited about that. Hey, British Gray from Tampa, Florida. What's up? Always good to see you, British Gray. I trust you had a great start to the week. Yeah, Eyeglass Lady says carcinogenic. So check out how beautiful the lobby is here in the Wells Fargo building. Hey, Ruby says, Tom, my old town is San Antonio, so cool. Yeah, I'm going to be there working actually on a project for, well, I guess I could say it. I may want to stream about it too. But we're going to be providing some IoT sensors for a pilot program for self-driving cars. So that should be fun. Tomorrow says I'm in Houston, but I also went to basic training in San Antonio. Hey, thank you for your service. We very much appreciate all of our veterans in the chat, so thank you for your service, my friend. Caddy says, air quality is so bad in China, they have to wear masks all the time. Yeah, so one of the things that's concerning me is the air quality in California, especially with all the wildfires. So I'm not sure if you guys remember this time last year, we were actually streaming in New York City, and we could actually see the physical smoke from one of the wildfires in California. It was wild. And look, even though I may not agree with Californian politics, and I think it's crazy, California is a beautiful, beautiful state. We really need to be doing something about all of these wildfires there, because it's affecting millions of people who live in California. It's destroying tons of personal property, and we got to find a solution to that, because here's what's going to happen, and I think we covered this before on a previous stream. What's going to happen is it's going to create a massive, massive problem with insurance companies. Insurance companies will start to no longer write policies on a lot of these homes. And I'm predicting this is going to start happening because what you're going to see is California is probably going to enact policies to cap or limit the amount that insurance companies can charge via premiums. And when that happens, I think insurance companies are just going to pull out of California altogether, sort of like what many insurance companies have done here. You know, we have what's called Citizens. Just let me cross the street here. I don't want to get hit. So here in Miami, or here in the state of Florida, because we have so much crazy weather, right? Hurricanes, obviously, number one. It causes so much property damage, flooding. Obviously, here in Miami, we have tons of flooding. So a lot of the agencies like Citizens, and I think the same thing is going to start happening in California if we can't get this under control. Hey, Lady Sarita, what's up? Good to see you. Hope you're well. Hey, Eyeglass Lady, says Tom, my father worked in agriculture and knew the cause of the fires. Poor forest management, no dark secret. Yeah, we got to do something about it because last year it was so bad that we could see the smoke, and not even joking, we could see the smoke all the way from New York City. It was really, really crazy. Semper Fi says, thank you for the kind words. Thank you for your service, my friend. Cynthia Martinez is here. Good to see you, Cynthia, fellow Miami resident. NMB 045 says, I'll be in Southern California in August. Can't wait. Ooh, jealous of that. Yeah, I think California is probably top 5 beautiful states in terms of the scenery, the landscape. I think New York is probably up there because New York, a lot of people, whenever you talk about New York, they think about New York as just New York City, Manhattan. But upstate New York, there's a lot to offer up there too. You know, you have the Niagara Falls, you have all the Finger Lakes. I'm not sure if anybody's ever heard of the Finger Lake region. But New York State is a big state. It's not just New York City. All right, everybody, so we are now walking across the bridge. Good time. We've already been streaming for about an hour and 20 minutes. So we're actually ahead of schedule, which is a good thing. Hey, MJ is here. Good to see you, MJ. Says, Tom, people trip about wearing the masks now. Wait until they have to wear masks due to bad air quality. Yeah, I know. That's sort of, you know, my mindset shifted with COVID. You know, outside I won't wear a mask. Indoors, you know, I won't wear a mask. I just don't see the value in it. But I do see a value in wearing masks if I'm going to take the New York City subway. I mean, it's almost like a no-brainer. Like, why wouldn't I? Because I don't want to breathe in all that disgusting filth.
I know.
All right, everybody. About the New York City subway. Hopefully the air quality here is a little bit cleaner, although we can get some smoggy days here in Miami too. Lady Sarita is on the self-driving cars. Did you guys see the car that was pulled over by the police that stopped and then took off? So I did see that. I'm not sure if that was fake or not, but I did see that. So Google Waymo. So Waymo is a division, or the self-driving car division of Google. And they're actually running a lot of pilot programs in San Antonio, Texas. But I think their largest operation is actually in Arizona near I think it's Arizona State University or ASU. Am I getting that right? I think Google Waymo is launching one of their largest pilot programs over there. So this is supposedly a very good Japanese restaurant here. And oftentimes we'll stream from down here too. Yeah, photos from around New York. Yeah, we actually saw one of those on the channel too. Bob says Miami's air quality is usually very good. I think it'll probably get better as the regulation on a lot of the cars get a little bit more strict. Lady Sarita, welcome. Says, I heard AZ is doing a lot with self-driving. Yeah, I think they are too, and I think one of the main reasons. So a lot of people, say, okay, how come New York City isn't the first one to roll out, self-driving cars? Because usually in New York City and big metropolitan areas, we usually get the best and brightest technology first. Well, you kind of want to, test drive autonomous vehicles in a place where, I guess, so if you're doing it out in the middle of the desert in Arizona, it's probably going to be a little bit safer for a pilot program as if you just want to rip one of these cars down Broadway. So I think it's actually a good choice to start there, and then as the technology gets better, you could slowly integrate that tech into metropolises, I guess, if you could call it. All right, so speaking of the Aston Martin building, we were talking about this a little bit today on the stream. This building has 391 units. It's not even built yet, it's not even complete, and it is 90% sold out already, which is crazy. So that just gives you a little bit of perspective about how crazy the real estate market is here. Hey, Atomic Skittles, what's up? Says, I saw one of those self-driving cars in New York City a few weeks ago, super cool. However, I've heard that they hit a few bikers. I agree that they should be tested in rural areas first. Yeah, you're right. Excuse me. But I always find it funny, and I think Elon Musk made a really good point. And speaking of Elon Musk, Tesla is reporting earnings on Wednesday, so that should be a spectacle, because the majority of analysts on Wall Street are probably not even going to ask about Tesla. They're probably going to ask about Twitter. But Elon Musk made a really good point when he was talking about, EVs. He'll say anytime you have a big fire in a Tesla, it'll be all over mainstream media. Anytime you see a self-driving car, hit a pedestrian, it'll be all over mainstream media like it's the biggest news ever. But people don't realize how many car accidents happen every single day that kill thousands of people. I mean, it happens every day. I mean, the only reason why the news will cover a crash with an EV or a crash with, an autonomous vehicle is because it's a new technology that they're unfamiliar with. So it's easy to hate on it. So it's the same thing with any sort of technological adoption. You always have people that are uncomfortable with the tech that'll throw stones at it because they don't understand it. And I think that's happened with all major technologies throughout history. It's happened to the same thing with cell phones. They're like, oh, I don't need a phone because you're going to track me and this and that, and I don't want people calling me at midnight, but I think will play itself out. Hey, Estelle is here. This is exactly true. Good to see you, Estelle. The ABX girl says, the New York Times article mentions about major structural issues in the new luxury buildings built between 2018 and 2021. Wow. So ABX girl, is that exclusive to Miami, or is that just anywhere? Because I think I just have to agree with you on that, because 432 Park Avenue in New York City is one of the most expensive apartment buildings in all of New York, but it has so many issues and so many problems. So 432 Park Avenue is one of those, I guess you could call it the Billionaires Row buildings in New York. And there's always major issues. So much so to the point where I think the vast majority of the tenants in that building against the developers. And I think another thing that has played into this is that I think we have a shortage of skilled labor in the country too. Hey, Line Sync, good to see you. MJ says the media will also highlight these issues because they're lobbyists. Ah, you're right. That is a good point too. That is a good point. It's sort of like, you know, back in the day, there used to be ads for cigarettes where they're like, oh, this is the doctor's #1 choice of cigarettes, which is kind of bizarre to think about, but that stuff did tend to happen. Katie says, Tom, we have a shortage of fair wages. Interesting thought for sure. I respect it. Hey, Atomic Skittles says, Tom, did you hear about Eric Adams' new plan for those 6-lane bike highways? I did not. But I would support that. I think that'd be pretty cool. Wow, check out this view of the City National Bank Miami Tower. Yeah, Semper Fi, I think with the comment of the night, anything new will always have a target on it. You're 100% right. You know, and I wrote about this in the Behind the Street newsletter. So I'm not sure if you guys read last week's newsletter. I attended the 2022 Bitcoin conference. And I sort of wrote about technology adoption curves and people that will sort of throw stones at new technology. And in that I included a link to an interview where, I forget the guy's name. Why am I blanking on the name? David Letterman, there we go. I included a link to a David Letterman interview with Bill Gates. And the whole time, and obviously he's a comedian, so he's supposed to be making jokes, but he was really throwing a lot of shots at Microsoft and the internet. And essentially David Letterman was making fun of the internet the entire time. He's like, why do we need the internet when we have a radio? He's like, you ever heard of a radio? And I think you guys should watch that clip. So if you type !news, NEWS, and click the last edition of the newsletter, and you'll see that YouTube video of I think it was a 1993 interview with Bill Gates and David Letterman. And it's so weird watching that interview now, because essentially everything that Bill Gates was saying, he's like, look, it's a new technology, it sounds crazy, but in 20 years, you're gonna be living your life on the internet. And David Letterman was roasting it the entire time. It was so surreal to watch that interview about 20 years later. So please check it out. Yeah, Yogi's like, why do we need holograms when we have FaceTime? Yeah, I think we'll live in a world, you know, when I'm 50 years old, we'll probably have meetings where I'll probably go on a meeting and I'll hologram or teleport into the office. I'm probably pretty sure that that's actually going to happen. Hey, NNB045, welcome. City, I want a bike from Battery Park to the Upper West Side via the Hudson River bike path. You should absolutely do that. So that used to be my commute for many, many years. Obviously in the summer I used to do that, not the winter. I would actually get on my bike or my skateboard and skateboard from 59th Street, Columbus Circle, skateboard all the way down to Wall Street where I went to work. I worked at 82 Wall Street. My office was right next to the Deutsche Bank. And I did that for many years. It was a great commute. Hey, Miss Brown Eyes, thank you so much for the $5 donation. You are very, very kind. I very much appreciate it. Thank you, Miss Brown Eyes, for the donation. Brad's Brains says Letterman was so good at his craft. He understood sarcasm very well. take his comments with a grain of salt, Tom. He was the best in my opinion. Yeah, so, yeah, no, I totally understand what you're saying. Like, that's his job to be funny, and the interview was hilarious. David Letterman is hilarious. The point is, you know, everybody at the time was poking fun at the internet, right? So his jokes were hilarious in that, and he probably wasn't 100% serious, right? But the point is, you know, he was making fun of these sort of grandiose claims saying, oh, the internet is never going to work in 20 years. Everybody's just going to be listening to radio, right? I guess that was sort of the precipice of his conversation. But I agree with you 100%. Lodi says, Tom, Letterman graduated from my college. Wow. And there's a sign hanging in the building with his name that says, C's get degrees. Wow. What college was that? I don't even know what college David Letterman went to. That's awesome. Hey, Sabrina Fair is here. Good to see you. Jean says, hey, Tom, hope you're having a good evening. Thank you, Jean. Good to see you. Samsung says, do you think private cryptocurrency will stick around when government issued ones start coming out? Yeah, so I think so. I think there's a multifaceted use case for cryptocurrencies in general. I think the use case of Bitcoin is more of like a store of value, digital gold. But I think there'll be other sort of digital currencies that'll serve a different use case. Because essentially, a lot of these alternative coins, you could say, a lot of them are just software companies, right? There's people working there developing software to solve a problem. Now with that, the vast majority of these projects are going to fail and go to zero and go bankrupt, right? But there will be that probably 5 to 10% of companies, I call them companies because essentially they are, it's just all software. 5% of those companies will do well and will become the next Amazon, will become the next Microsoft. So I do agree. But another thing is, a lot of people say, oh, digital currencies will never work. Digital currencies are a scam, digital currencies will never work. To which I say, we already have a digital currency, the US dollar. 90% of all the currency, and I'm using air quotes here, 90% of all the actual currency via the US dollar is not even actually physical money. Like you can't actually go into the bank. Let's say if you have $1 million in your bank, you have $1 million account balance. You can't walk into a bank and take out $1 million. They physically don't have it. They have to order the money. Like, I don't even carry cash at all. I use Apple Pay. That is a digital currency. That is a form of digital asset, right? So we're already making payments digitally. So I think that is going to expand and grow. But I also think we'll probably have a Federal Reserve digital currency as well. Yogi says, Tom, Bitcoin and Ethereum are here to stay. John K says, clear stream and great talks, Tom. Thank you, John. I appreciate you being here. If you guys are enjoying the stream, feel free to hit the like button. Yogi, welcome. Brad's Brains says, I'm just trying to learn crypto. Reading the Bitcoin standard, but why do I want to give controlled crypto? They do nothing right. Help me out here. Yeah, so I think, like, again, I think there's a multifaceted use case. So, Brad, if you read, I think you already did, but if you read my newsletter last week, I think one of the main value propositions in Bitcoin is that it is an unconfiscatable store of value. So for example, nobody, no government, no anything could steal my Bitcoin. And I'll give you an example. You know, everybody talks about gold as being an unconfiscatable store of value. But we know it's not because we've been through the Great Depression. Well, maybe not me and you directly, but the United States has been through the Great Depression, where the United States has actually confiscated people's gold. You know, during the Great Depression and after, you weren't allowed to carry physical gold. You had to turn it in. With Bitcoin, if anybody bans Bitcoin, it's impossible for any government or agency or entity to confiscate your Bitcoin unless they know your private keys. So I think that's just one specific use case. So for me, I have roughly a 10% allocation to Bitcoin. I don't mind if the value of my Bitcoin drops 20%, because my value proposition and use case is, look, if stuff hits the fan and stuff gets really bad, this will be my digital store of value that nobody could confiscate. So here is use case number 2, or example number 2. Familiar with what happened in Cyprus, but in Cyprus, to sort of paraphrase what happened, they went bankrupt. And they essentially said, okay, anybody who has over $100,000 in their bank account, we're just going to confiscate any dollar over $100,000. And they just took it. The government went into their bank account and stole all their money. Right? You can't do that with Bitcoin. Now, I'm not saying Bitcoin is the best thing on earth. I'm just saying it serves a specific use case. Robert Sandoval says only gold bars and coins were confiscated in 1933 and paid out 35 cents per ounce. Yeah, so you're 100% right, but what would you rather have during the Great Depression? Would you rather have a hyperinflationary currency like the US dollar, or would you rather have gold, physical gold? The point is, during times when you actually need sound money and real money, the government confiscates it. And they give you paper money, which I would rather have physical gold over US dollars. Hey, TMB says nothing is impossible. Good to see you, my friend. Russell Miller says we always love your walks here in Philly. Hey, I'll be back in Philly very, very soon. I enjoyed my time in Philly, even though I was only there for probably like 48 hours. I really did enjoy my time in Philly. Hey, John is here, welcome. Samsung says, I think the fact when Russia invaded Ukraine and the Russians used gold to evade sanctions instead of crypto was the handwriting on the wall for crypto. Interesting. Well, the majority of of Russia's gold is located in New York City. Hey, Mr. Shea Butter, welcome. Good to see you. Yeah, the majority of the world's gold is located at the Federal Reserve in Lower Manhattan. Hey, Savvy says good night, Tom and everybody. Tom, my daughter is going to San Francisco. Hey, hopefully she could see the Salesforce Tower. Love that. Semper Fi says, Tom, I like your channel. Very interesting topics. I have subscribed already. Well, thank you, Semper Fi. Much appreciated. NMB045. To make Bitcoin the world's reserve currency because it forces diplomacy. You can't sanction a country's Bitcoin reserves. That's actually a pretty good point. I never thought about it like that. Oh, is this Apple Store still open? Wow. And look, I'm not making the argument. So I think here's what a lot of, I guess you could call Bitcoin maximalists. They think that you should throw all your money into Bitcoin because it's the end all be all. I'm not smart enough to know if Bitcoin is the end all be all. But what I am smart enough to do is understand trends and make an informed decision to say, okay, I see a value proposition here. But the value proposition that I see earns that particular asset. It doesn't earn it at 20%, not 100%. For me personally, it earns about a 10% allocation. So here is the view from the Brickell City Center. On the internet, staying intact internationally, yes. Suppose that ceases to be the case, not impossible. Yeah, so if the internet goes down and there's no internet and there's no power, then who cares, right? I think we have bigger things to worry about than Bitcoin if everybody goes back to the Stone Ages. Hey, Lady Sarita says, I like how you state your views, Tom. Not over the top either in opinion. Yeah, and I'm open to all viewpoints. I'm open to all viewpoints. But good to see you, Lady Sarita. So we'll be down here. We're probably going to start tomorrow's stream from here. But I was thinking about streaming from Brickell, but walking to South Beach. But I'm not sure the internet will hold up. I'm not sure the internet will hold up if we do that. Hey, Mercury X, what's up, my friend? Says, if pump and dump scams are the Bitcoin norm and go the way of NFT as far as useless commodity, except to a niche market. So I think that, I would say the majority of the pump and dump schemes are like in the alternative coins and the NFTs. If you want to talk about fraud, the majority of the NFTs are total of fraud. But I agree. I respect your opinion, though. I respect it. Let's see. But good to see you, Mercury X. I think you make a good point, though. Salvi says, Tom, it's for a research conference. I'm so excited for pictures. That is awesome, my friend. Well, please send them in the group chat. Yeah. Good to see you. NMB 045 says, doesn't the Bitcoin paper wallet have value without internet power? Yeah, so having a paper wallet essentially means you're taking your Bitcoin offline and storing it literally just in like a paper wallet, right? You own your private keys. You write your private keys down. You could put it in a safety deposit box. You could put it in a safe at your house. And essentially the Bitcoin that you own is offline. So here's the main thing, the main issue that happened. So if you think about what happened in Mt. Gox, I'm not sure if anybody was in the Bitcoin space when Mt. Gox or Mt. Gox got hacked. Essentially everybody was storing their Bitcoin on the centralized exchanges. So when those centralized exchanges got hacked, they lost all of their Bitcoin. They lost all their purchasing power. And people to this day are still trying to get back their Bitcoin. So that's why there's always this saying in the cryptocurrency world that if you don't hold your private keys, it's not your Bitcoin. So anytime you purchase Bitcoin through Gemini or Coinbase, theoretically, if you leave that Bitcoin or Ethereum on the exchanges, if the exchange gets hacked, well, you're out of luck. But if you pull your Bitcoin off the exchanges and you leave it on what's called a paper wallet, nobody could hack it. It's what's called going into cold storage, which you're right. Mercury X says, Tom, legitimate Bitcoins need a stable base. If you want to accept Bitcoin, you can do that. Others with products of value will also accept it, but not everybody will and might want other commodities. I think that's a phenomenal point. I think that's a fantastic, phenomenal point. And I think that's probably why I'm one of the only people that is against making Bitcoin legal tender. I'm actually not for that, surprisingly. And I'm very bullish on Bitcoin. I love all the technology and the brain power around Bitcoin. But I'm actually against the people who want to make Bitcoin legal tender. Because that means people have to accept your Bitcoin. And I think the purpose around Bitcoin is the freedom of choice. So I don't believe in mandating anybody to accept something as a form of payment. But that is just my opinion, and I could be wrong. Ooh, we're locked in. Hey, Daniela says, hey Tom, good to see you from Venezuela. Welcome. Love Venezuela. Hope you guys are doing well over there. All right, we are outside. Photos from around New York's like locked in again. Ren says, I think the El Salvador's president made Bitcoin a legal tender. They did. I think that's an exception to the rule because, in El Salvador, it's a very, very, very small economy. I mean, you can't even really compare it to the United States. And unfortunately, the currency is in hyperinflationary collapse. So I think with a lot of the innovation, I think Bitcoin has the ability to probably triple the GDP of El Salvador over the next 5 years. And I think that's mainly through a lot of the funding or the money they could raise through a lot of the volcano bonds. But that's sort of my opinion on that. But everybody, just to recap the stream, so the topic of tonight's stream was Bank of America earnings. So Bank of America did report earnings today after the bell, and they did earn about $7 billion versus $8 billion that they earned last year. But, a lot of people on Wall Street are freaking out about this. This is a nice Tesla in front of us. A lot of people are freaking out about this, but here's the thing. Last year, we were in a raging bull market, and the majority of the earnings at large investment banks come from equity underwriting deals. So in the IPO market, the more companies that IPO or go through an initial public offering, the more money that these banks will earn. And not only, they don't just have to go public via IPO, they could go public via SPAC or special purpose acquisition company. And ever since we've been in this sort of equities correction, there's been an absolute gridlock or a freeze up, reducing the amount of fees that these banks charge when they take a lot of these companies public. So revenue came in at $23.23 billion. It was actually up about 2% year over year. Many analysts on Wall Street were expecting $23.11 billion, so a little bit of a beat. A little bit of a beat on the earnings side. I think EPS or earnings per share came in at about 80 cents, and analysts were expecting 75 cents. So a 5-cent beat, nothing crazy, but Bank of America did beat earnings on both the top and the bottom line. Let's cross here. Look both ways. John K, thank you for the time check, 10:54. We are right on time. So investment banking income fell 33% versus last year to $1.53 billion. Obviously for the reasons we talked about. But I think the main topic for the earnings report was that at all of the major investment banks, except Bank of America, home loan originations fell off a cliff. Could have been due to a couple things, but many of the CEOs at some of these banks, including Jamie Dimon, why the loan originations fell off a cliff in terms of mortgage originations is because of the rise in interest rates, but it also could be due to the fact that inventory is so low. But I think it's probably a little bit of both. So if you guys want a full earnings recap and you want to know my thoughts on the housing market and the equities market, if you type !news, NEWS, in the chat, the Nightbot will drop the link to the Behind the Street newsletter that I will be sending out to everybody tomorrow once the market closes. Oh, I think our gimbal died. I think our gimbal died. But actually, it died right on time because I think I got to go get the bus and I need to head back to downtown Miami. But I had a really good time, everybody. I think this was a fun stream. Thank you all for joining tonight. And we'll see you back here tomorrow because I have to get the bus. Could we do a quick time check in the chat? The gimbal, and we'll do a quick time check. Hey, EBITDA, you have a good one as well. We were just talking about your employer, Bank of America. Actually a pretty good quarter. I was actually pretty impressed with Bank of America's quarter. 10:58, yes, we are right on time. So everybody, I want to thank you very, very much for joining tonight's stream. I want to tell everybody to have a fantastic week. It's going to be a great week. Even crazier this week is going to get on Wednesday when Tesla and Elon Musk reports earnings. We're going to be here to cover every step of the way of Tesla's earnings report. But I have a feeling that many of the analysts on Wall Street, they're not going to be talking about Tesla's earnings. They're going to be asking a lot of questions about Twitter. Obviously, Elon Musk is in the middle of a hostile takeover of Twitter. So that should be a lot of fireworks going on in that situation. And we will see you all in the next one. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. And you just need to know where to look. So John K., thank you so much. Sabrina Fair, Ron, I appreciate it. JD Harbor, appreciate it very much. Penelope, the one and only, thank you for joining. Robert, thank you for joining. If you scan the QR code, it'll drop the link to the Behind the Street newsletter. But Abdullah, thank you. Line Sync, Robert Sandoval, Penelope, EBITDA, JD Harbor, Ron, Abdullah, Ruby Falcone, John K, Otto. Make it a good week, everybody. Like and subscribe and have a fantastic week. We'll see you back here tomorrow night.